What lies ahead for crypto? Not the hype, not the speculation, but the real lasting transformation. Let's go beyond the noise and break down where this entire ecosystem is headed. Because if you understand what's coming, you can position yourself years ahead. Part 1. The cycle has changed. In 2021, crypto was all about excitement, meme coins, NFTs, buzzwords. It was loud, it was fast, it was speculative. But that's over. Now, in 2025, crypto is entering a new phase 1, defined by maturity, infrastructure, and global integration. The speculative wave gave birth to a more serious movement. And now the world is paying attention. Institutions, governments, developers. They're not chasing hype, they're building systems. This is the next phase, and it's much bigger than you think. Part 2. What is actually changing? First, macroeconomics. The world has changed in the last 2 years. Interest rates surged. Inflation shocked global markets. Currencies like the yen and euro weakened. In response, capital started shifting. Gold rallied. Bitcoin surged. Why? Because investors began looking for assets not tied to a single country or government. Assets that exist on open networks. Assets that can move freely. Crypto became part of a broader macro conversation. Today, Bitcoin isn't just digital gold. It's a signal of distrust in fiat systems, a signal of demand for borderless value, and a signal that the old system is reaching its limits. Part 3. Institutional adoption is no longer theory. Look at what's happening on the institutional side. BlackRock launched a Bitcoin ETF. Fidelity, VanEck, and ARK Invest followed. Billions of dollars are now entering crypto through regulated channels. But it doesn't stop there. Goldman Sachs is testing tokenized repo markets. Visa is processing cross-border payments with stablecoins. And the IMF, they're building frameworks for global digital currency interoperability. This is real. This is happening now. And the institutions are not playing with meme coins. They're investing in infrastructure and rails, security, compliance, and scale. Part 4. The rise of tokenized assets. Now here's something most people are missing. Tokenization. Real-world assets are coming to the blockchain. We're talking about government bonds, real estate, private equity, art and collectibles, all issued, managed, and settled on blockchain networks. Why? Because it's cheaper, faster, and programmable. BlackRock has already launched tokenized treasury funds. JP Morgan is working on tokenized collateral systems. Imagine a world where stocks, houses, and even carbon credits live on-chain tradable 24/7 globally. That world is being built right now. Part 5. New layer 1s and modular design. Let's shift to technology. Ethereum is still king, but the way blockchains are being built is evolving fast. The old model was monolithic. One chain does everything. The new model? Modular. Projects like Celestia are creating layers just for data. Others like EigenLayer are creating restaking frameworks to secure multiple chains. It's like how the internet was built. Modular, flexible, and layered. This shift allows developers to build faster, more secure, and more scalable applications. It also opens the door to custom blockchains built for specific use cases like gaming, AI, or DeFi. The takeaway? The blockchain stack is maturing, and that means more adoption, more reliability, and more innovation. Part 6. Stablecoins are quietly winning. While everyone watches Bitcoin's price, stablecoins are becoming the dominant use case. Tether, USDC, DAI. Together, they process trillions in annual volume. Why? Because they offer what traditional banks can't. Instant settlement, global access, no banking hours. Emerging markets are adopting stablecoins as dollar substitutes. People in Argentina, Turkey, and Nigeria are using them to escape local inflation. Even major corporations are using stablecoins to pay vendors and employees. This isn't speculation, it's utility, and it's growing faster than almost any other sector in crypto. Part 7. Regulation is catching up. What about laws? What about governments? Good question. Because for years, regulation was a gray area. Now, the fog is clearing. The US has approved Bitcoin and Ethereum ETFs. Europe has passed MiCA, a full framework for crypto assets. Countries like the UAE and Singapore are creating crypto hubs with clear rules. Even China, despite its bans, is exploring regulated crypto zones. Yes, some regions will clamp down, but overall the direction is clear. Governments are not ignoring crypto. They're figuring out how to control and integrate it. And once regulation is clear, more institutions will enter. More banks, more asset managers, more pension funds. That's when we reach escape velocity. Part 8. AI and crypto. a powerful combo. Let's talk AI. Right now, artificial intelligence is booming, but AI needs two things to grow: trustless data pipelines, cheap compute power. Crypto provides both. Blockchains offer transparent, immutable records, perfect for training data. Projects like Ocean Protocol and Fetch AI are building decentralized data marketplaces, and compute networks like Render and Akash provide the power AI needs without relying on AWS or Google Cloud. This is where things get interesting. AI will need crypto, and crypto will benefit from AI. It's a mutually beneficial cycle that's just beginning. Part 9. Real builders are quietly taking over. In 2021, everyone was talking. In 2025, the builders are doing. Look at the data. Developer activity is up. New smart contract deployments are rising. More users are interacting with on-chain apps, especially in finance and gaming. And funding? Yes, VC funding slowed down in the bear market, but serious capital is still flowing into infrastructure, ZK tech, real-world asset tokenization, and security. The fluff is gone. The noise has died down. What's left is signal, and the signal is strong. Part 10. The new crypto investor. Now let's talk about you. The average investor in 2025 is not the same as in 2021. You're smarter. You're asking better questions. You're looking beyond price charts. You want to understand, what does this token actually do? Who is using it? Is there product market fit? What happens in a recession? That's the mindset that wins in this new cycle. Because this isn't just about number go up. It's about identifying the infrastructure behind the next generation of money, trade, and technology. And that requires clarity, not hype. Part 11. Where do we go from here? So what lies ahead? Bitcoin as a macro hedge, Ethereum as a programmable settlement layer, stablecoins as global digital dollars, modular chains enabling scalable applications, AI, gaming, and real-world assets on-chain. That's the direction we're heading. Not overnight, not without setbacks, but steadily and with purpose. This is the shift from crypto as speculation to crypto as infrastructure. Part 12. Final words. Let's be honest, the headlines don't show it. The average person doesn't see it, but the foundations of the next financial system are being laid quietly and quickly. And those who understand what's coming are not watching TikToks. They're watching signals, so stay sharp. Watch what the smart money is doing. Watch where the builders are going. And most of all, keep learning. Because what lies ahead could change everything. If this video gave you clarity, hit like. Subscribe to Crypto Wayfarer for deep, real breakdowns every week. And comment below, where do you think crypto is heading next? Until then, stay curious, stay grounded, and stay wayfaring.